The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 115, Nasdaq up 66, S&P's up 7, gold contract down $8.90, trading at $15.51 an ounce. We have silver down 25 cents, $17.91 an ounce. Light sweet crude up 48 cents, $59.12 a barrel. And, you know, I mean, the metals they hit, oil they hit. Oil is actually down 10% in 2 days, right?
Pick a market, man. It's crazy. And I just even said oil since 7:45 this morning down more than $1. So it's still happening.
Wow. Notes and bonds. You get the 10-year down 4 ticks, trading 128.20, 30-year off 9 at 156.03. And King Dollar up 151 ticks, trading 97.450. That jumped in this higher range. Anything above 97.141, folks, it's in the higher range once again. Euro is at 111. The yen is at 109.5, and the pound is at 130 to 1 U.S. dollar. Sherwin-Williams, green paint.
We're going to get a recording, man. I'm going to have the producers just record it. Say, record open. Record open.
So what they did, let's just look at this S&P for a second. So right what they did, ESH0 on the open, I believe they made a new high, right?
I believe so.
We got up to
32.74.
32.74.
That has a nice ring to it.
The peaks that had above it says,
oh, man.
What can you do for me today? Well, let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Think or swim as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here. 12 to 1 Eastern Standard Time. You want to understand the options market. You want to understand strategies inside the option market. You want to understand the futures market. Outstanding program. You're at TFNN right now. If you haven't test-driven the Thinkorswim platform, real easy to do. It's a retail platform that might as well be a professional platform. Just hit that button, bring it up. They'll allow you to trade paper money with Kevin and his team every trading day as they go through these strategies. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Another day. Here we go.
Here we go, man.
This is, you know, you got to like the movement that we're getting on a daily basis here. I mean, the one thing that sticks out at me, though, guys, with everything that we have going on in these markets, with, you know, geopolitical tension, with all these things, the VIX is trading at a ridiculously low level.
Yeah,
I agree.
You know, volatility. I mean, so the good news is for people who think that volatility is in our future, insurance or protection for your account is incredibly cheap for what's going on in the world and where we are in this market. So there's a lot of good things to talk about this market in terms of movement and stocks and, you know, how the chip sector has come back, all these things. But we're a week away from earnings season firing up. You know, yesterday we talked about consumer staples.
Yes.
Today we're going to go to the consumer discretionary, and that is food. Chipotle, McDonald's, Starbucks. We're going to cover those three names today. We're going to go through the difference really between consumer staples, which we looked at yesterday, and today with consumer discretionary names.
I was just talking about McDonald's before we came on the air, Kevin. Yeah.
And I'll tell you why you should talk about McDonald's. I have a 13-year-old daughter, right? Yeah. She wanted McDonald's last night. She hasn't had it in a while. I figured, fine, we'll go get McDonald's real quickly. We go get basically 2 human beings' meals at McDonald's for her and I to eat.
Yes.
Under $7.
Yeah.
Yeah.
And that is the reason that you can never count out McDonald's. If they can put up that kind of scale for that price, that is a serious threat to anything in the fast food business.
No, there's no doubt. And, you know, what they got going very quickly was the delivery. When they start delivering, they did a test drive, Kevin. It was in Tampa when they first started this, and it exploded. I mean, and it was so intriguing to me is that just like you said, the value there, you know, 2 meals for that dollar, But guess what? The value, people will pay more money to get it delivered.
Everything.
Which is, I mean, my house is filled with McDonald's French fries.
Yeah, and I want you to think about something. Who's the big loser in delivery of food? There was a time in our lives, Tom, Tommy, myself, pizza was the only thing you could get delivered to your house.
That's right.
Now you can get anything.
You can.
You can get the best steakhouse in your town to deliver food right to your door.
Yeah.
Pretty cool.
You know,
I mean, it's amazing how the delivery of food to your door has evolved away from only pizza.
That's right. And folks, if you think there's not a new mousetrap out there, okay, that whole being that everything is discovered, that was sitting, what Kevin's saying, that was sitting in front of all of us forever. Because
for our entire lives.
Yeah, because the guy that got it going was Tom Monahan at Domino's.
Yep, at Domino's Pizza, exactly.
And I heard the interview, I'm going back 15, 20 years now, right? He was saying to the interviewee that he's in the delivery business, not in the pizza business. And it's amazing.
Him saying that.
It's amazing what he did.
Yeah, I was thinking about this morning. So, of course, it really took, somebody like Uber having that infrastructure where they could just deliver it. But guess what? I was actually thinking about this morning. That was actually available. Somebody could have put together the app just to use cabs. You could have had like the cab delivery, and you could have had all these cabbies that logged into the phone and picked up these orders. It was there, man, because people wanted it. And it was there, and it just took a company like basically Uber to say, we have the drivers, we'll drop off anything at your door, just pay us.
You know what's so crazy?
And I have a bunch of young children, ages 13 to 27, and when they're at my house, guys, it's like I need a traffic cop into my driveway with all the food delivery going on in my house.
It's a fact, man.
It is.
There's cars going up and down my driveway constantly at all hours of the day
It's
and
the
night.
new norm.
And I'm like, what's that? Oh, delivering food. Oh, okay.
So this is so funny saying this, Kevin, because our living room is at the front door, and when any of the kids come out, you know that I says, okay, they're opening the front door. This is going to be a delivery person.
Yeah.
It's that cut and dry.
You need the phone, you need technology, and now you have the drivers that are paired up with it, and then you have the businesses like McDonald's capitalizing on the demand. Yeah.
Big numbers, man. Big numbers, no doubt.
So we're going to go over all of those today. As, like I said, the theme of this week, as we're in between earning seasons, is themes.
Yes.
And today's theme is consumer discretionary.
And, you brought up a huge point at the beginning, Kevin, about the aspect of the VIX being so low. Because, folks, this is why you want to listen to the program, because we talk about defined risk. When you have a VIX that's this low, you can put insurance on a portfolio for very inexpensive money. You're not, you'd be really surprised, and it is what it is. And the VIX is saying that, guess what? The volatility's not going to come. Well, guess what?
Especially when Tuesday night, we just saw the indices drop 2%.
Yeah.
And that's 36 hours ago. So it's remarkable.
I mean, think about it right now. You've got the VIX down 43 cents at $13, basically. You've got crude oil now below $60 in the world that we live in right now. And I will finish that statement with subject to change without notice.
Oh, boy.
Yes.
Because it can go on a flip of a switch. Both those could flip.
Yeah.
So it's just a really interesting time, and it's a time that you have a lot of options to help you make decisions and hedge your accounts.
I love it.
Right here, folks, 45 minutes from now, outstanding program. Kevin, you have a great one, safe one. We look forward to the program. You have a great weekend. We look forward to speaking to you next Tuesday.
Thanks for having me on, guys.
Thanks, Kevin.
Thank you. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 123. Nasdaq up 68. S&P's up 8.5. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 140, Nasdaq up 71, S&P's up 9.5, and we'll go to natural gas. I'm just curious in this S&P. I want to see how this.
Curious in this S&P. What's going on?
Yeah, just how it popped the highs. Did it pop the highs in the open? That's what I want to see.
I believe it did.
Okay,
Yeah.
so.
There you go.
Yeah, just 32.74.
Now, that'd be the intraday. I think overnight, if you back things up, it was pretty close to that same price level. Where is that? One to the left of that. There you go, 32.74. That's what I thought.
Like, how does that work?
Yeah.
Meaning that, you have four numbers and it actually just whacks the four numbers, hits it, right? It doesn't even go to 0.25. It's like so wild, man.
Yeah.
I'm telling you. NQs. Now, the NQs, this is where the
we're above 9,000 in the NASDAQ 100 now.
It looks like it's going to be an ABC up.
Look at that bar yesterday. My goodness.
I know. And, guess what? We had taken that B.0 with volume, and that gets you, this is pretty intense, man.
Let me guess, 25,000.
Oh, probably.
I'm kidding.
We can do that one.
I'm
but
joking.
So the 214.5.
Okay, we'll call it 215 then.
Okay.
Easy math. No, one to the right? Where are you going from?
No, because this is a bad tick. See, I happen to, if you're on December 3rd, folks, and they haven't fixed that tick. I remember this day, man. It's
okay.
I don't know why
I just saw it stick
fixed.
out.
Yeah. So 201.78. Call it 202, right? To 214.
I guess. If it's a bad tick, it's probably still down there somewhere, though, right? It's not a whole day of a bad tick, right?
No, but it was almost flat. Like if I bring this back, it's the top of that.
So call it 193, 194. There's that.
Yeah, 194. Let's say 194. Oh, it's $10. $10.50.
No, $20. $20 to 214. $20.
Yeah. That's 232. Oh, my God.
Yeah.
That's 232 in the Qs.
Yeah. Oh, yeah. I mean, look, that's a big leg, man, that we just, that was a big finish to December, man. Everybody was saying, can it hold the gains?
That'd be sick.
And even the final quarter,
I know,
look at from October, November, December, October 3rd.
181.
181. We finished the year out at, where are we? 211?
Yeah.
Remarkable, man.
Unreal. Natural gas. Let's see what we're doing with natural gas.
All right, let's pull it up. Let's see where we're going. So we get natural gas inventories at 10:30, 10:21 right now. Let's pull up these markets. I'm going to refresh this to get the most active contracts. Close these bad boys out here. Clear our slate. Natural gas. Let's see where we're starting off. So we're trading at 212.57.
Still laying at the lows.
Quite a day for oil yesterday, and natural gas had some movement as well. Overnight, we're up at almost 217. You trade down to about 211, just above that level right now. So if you jump to the 11 a.m. expirations, we're going to have a price point of 215 that you can gain exposure from. And what's going to happen here is, at least on the Nadex platform, they all line up on the nickel.
Yes.
And when you're sitting at 212.5, you're going to be right in the middle of
10,
that.
15,
so if you want a straight volatility trade, you're not going to get a contract that begins at 212 or something like that. But what is nice on some of these is that you could get a good directional trade because you're not paying a lot of money. Like, let's say, for instance, if you want to go bearish, right? You're right inside, so you're slightly in the money. If you understand options, right? You're not out of the money, so you're not paying a ton of premium. You're slightly in the money. You're going to be paying a little bit of premium, but nothing too crazy, and you get a nice risk reward. So let's say you want to continue the trend downward. We get the inventory numbers in 8 minutes. We're trading at 212.6, call it, and you can sell this. Now look at this, though. Again, what is up with that bid offer spread there?
Look at the spread.
Huge. So I don't know what's going on, but I am not going to be the one selling it at 211.7.
Yeah.
When the market maker is not going to sell it to the market any less than 214.10. Just huge. And, you know, if you have some huge conviction, you know, more power to you or something. And again, it's still, you're paying about a penny here in spread. So you're risking 33, which is the risk from you selling it at 211.7 up to 215, which is your max pain, and you have profit potential down there. But that's a big spread. Anytime there's that big of a spread in the market, buyer beware, man. Let's see how the dailies maybe line up. So here's the flip side of that. That was a good bearish one if you want to go bullish. Now, again, huge bid offer spread, though.
Yeah.
212 to 214.8. They got to get their market makers together over here. You know, I don't know what's going on, but that's a contract I don't want to trade because I want to be able to get in and out too.
Right.
You know, I'm not. I want to be able to. I don't want to have to hold this to expiration.
Right. You're losing 4 cents just on the trade.
Yeah.
2 on each side.
Right.
Yeah.
Even 5, call it, right? It's 2.5. It's 2.4 pennies to be exact. So that's 4.8 pennies. If you just buy it right now.
And the contract has only moved 5 pennies all night long.
It's that's a big one. So not quite the day maybe to be trading natural gas on there, but it will be interesting to see where this goes. You back things up Tuesday, Wednesday.
Let's see what the whisper number is.
Go for it.
So natural gas, we're right there. Storage, there we are, all right?
Got it. So they're looking for minus 50.
Minus 50, the whisper number is minus 51. So they're still looking for a draw.
We're going to minus 24.
Okay, yeah, so that's bearish.
Yeah.
Okay, cool. And then NG, whoops. NG 20th. 212.
Thinking it's been.
Ooh, just laying at these lows. Look at that. Yeah. So this is, you know, we'll see where it shakes out, but it just doesn't.
I think we got plenty of natural gas. That was the gist. You know, they're looking for stockpiles to decline by 50. I said, maybe we'll only decline by 24, and maybe we'll see the price extend to lower prices, man. Plenty of oil, plenty of natural gas.
Wow.
Yeah. How about jumping around? We were just reading the story about Verizon, right? Pretty interesting, just in terms of the fundamental scape of cutting the cord, whether it's Disney, Netflix, Amazon Prime. So Verizon abandons video bundles in bid, to stem cord cutting. So its Fios video and internet service would abandon the cable industry tradition of locking customers into long-term bundled packages. This could be monumental, not to understate, but you know, this is the foundation of what cable television's built on. They lock you into everything. You don't get to mix and match. You got to just buy the bundle, and then those channels get paid out according. ESPN was reaping the benefits of that. Disney for years.
Yeah. A new model called Mix and Match. Huh? Look at that.
Yeah. So consumers are going to be able to choose among a variety of video channel packages and internet router speeds without signing an annual contract. Verizon also plans to roll various fees and surcharges into the base price of its packages to clarify what subscribers are really paying. they're in a tough landscape of having to compete with a very simple price. You sign up for Netflix.
Right.
It's $13.95, whatever it is, right?
Yeah.
It's $13.95.
Right.
You might pay taxes on it. That's it.
End of story.
And let alone what's Disney right now? $6.99
Right.
plus taxes. So they're aware that that's the customer that they're dealing with, man. So customers are tired of having to buy a bundle with services they don't want to get the best rates. Verizon's Senior Vice President of Consumer Marketing and Products, cable providers are struggling to adapt to consumers' increasing desire for so-called over-the-top streaming services such as Netflix instead of old-fashioned linear television. Verizon in October reported a third-quarter net gain of 30,000 customers and a loss of 60,000 video. So they gained internet, they lost 67 video.
Yeah.
They got to stem that.
Stay right there, folks. Tommy and I are coming right back. We'll have those natural gas numbers for you. Dow up 143, NASDAQ up 73, S&P's up 10. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, welcome back, folks. Natural gas stocks fell 44 BCF.
Looks like I shot the moon a little bit too far. They were looking for a decline
You
of
did pretty good, though. Yeah. You did 25, right?
Yeah, that's quite a miss from 44, I'd say. But the estimate was 50, comes in at minus 44, but more natural gas than they expected, bigger supply, little bit of a thrust to negative territory in terms of trading from about 212.5 we're at, almost made it down to about 211. We're sitting at about 212.
The thing that's amazing is that that's a very small draw period for January.
Okay.
When,
Yeah.
you know, as soon as we get warm out,
Yes.
we see builds of like 100, 125 like nothing.
Yeah.
I mean, you think that, okay, it's January.
Yeah,
right?
because we covered that story about the spread trade, right? In terms of
collapsing.
the price difference between the contracts right now versus the contracts in April.
That's right.
And how there being no price difference at all.
Zero.
Yeah.
Yeah. Pretty amazing.
Yeah, when it should be much more expensive right now, but it's just not happening.
Yeah, no doubt.
So, you were talking about this story during the break.
This is a pretty cool story, folks. I mean, we know this, but, you know, when they get caught in the act, it gets really intriguing. So Blackstone and KKR, what the story is about is that you know, the headlines say it's an ad blitz that unleashes Washington fury. Now, don't believe that headline because
I haven't heard of Washington Fury about it. I haven't even heard about it.
Exactly,
So.
because what happened is that they got away with what they wanted to get done. And what they wanted to get done, KKR and Blackstone had just bought medical staffing companies, folks, and they paid $16 billion for them. This is a year and a half ago. So what ended up happening, they claim out of nowhere, is that, you know, if we go to an emergency room, what tends to happen is that your insurance is going to cover so much money, but then, and this is why you see so many of these now emergency physical small places across the country.
Okay.
Because it's a different billing structure and they get away with murder. That's the real bottom line, okay? So they say it's an emergency. If we go in, even when they get a little cut, well, it's an emergency room structure.
Yeah, different billing, right?
Different billing. So what this story is about is that there was legislation that was going to go through, they're trying to get through, that there has to be disclosure of exactly what's happening when we're walking into an emergency room, right?
Yeah.
Well, the bottom line is that you can see the type of money. Well, I can see they just spent $16 billion. These two companies spent $53.8 million in television ads, okay? You know,
and so they all depict, you know, patients in trauma being denied care, and urge viewers to call their politicians.
Right.
And it says there was a bipartisan backlash.
Yeah. But guess what? That's what it's inside the story. That's why I read it. I said, this is a joke. They say there's a backlash, but guess what? When push came to shove, the bill did not go through.
Okay.
So they won. You know, it's like, okay. So the money won again, which we know the money does win. But you know, I thought it was so intriguing because of the fact that where's the backlash? In Washington, D.C., folks, it's all about money. Listen, backlash, give me a break.
So the bill they're fighting would effectively cap how much medical staffing firms which outsource doctors to hospitals can charge patients. Blackstone completed an acquisition of Team Health in 2017, valuing the company at 6.1. KKR bought Envision, valued at 9.9. There's your $16 billion between the two of them.
Isn't that wild?
Yeah, healthcare policy analysts predict revenue would fall significantly if Congress capped the company's fees. Yeah.
It's amazing to me that we can't get that under control because we know that when you actually look at the bills that come across and bills that the insurance companies pay, they're outrageous, man. And they have been for a long period of time. It's been the same argument forever. And every time that they go after healthcare, they don't go after, to me, they don't go after this part of it.
Yeah. And this is the problem when you see, you know, stock prices going through the roof and middle-class Americans getting hurt. It's like, this is a perfect example, right? So if they win, their shares go up, Americans get hurt. Prices in, you know, new records in the stock market, Americans get hurt, man. It's tough. But the fight's far from over. In December, lawmakers tried to include a measure on surprise medical billing in year-end legislation funding the federal government, but couldn't work out their differences. Surprise, surprise. Key negotiators, House and Senate, set a deadline. Yeah, they, you know, deadline after deadline. Team Health and Envision, these are the two companies they purchased, influenced the debate via a French group called Doctor-Patient Unity. One ominous ad showed an ambulance arriving at a hospital with a dark and empty emergency room, all because of government rate setting, you know, playing on fears. It's a bummer that that's what we've become to come to accept. The ads are disgusting and only meant to take advantage of vulnerable Americans. Yeah, I would agree. You know, you spread fear, and that's the bummer.
And the sad part is that bad news sells better than good news, too.
And they worked, and the calls from anxious voters flooded the offices of House and Senate members after the ads began to run. And once they started probing, they found out that, private equity controlling the companies behind them. No advocacy group spent more than doctor-patient unity on a single issue in 2019. Think about that. Not a single advocacy group.
Right.
And there's a lot to advocate on on the part of Americans. Spent more than 2 private equity firms spent on the ability to overcharge Americans visiting the ER. And we wonder why we have healthcare costs out of coverage.
No, it's, yeah. And it just goes on, folks. Again, it's...
And this is where it gets into the specifics. But surprise medical billing, long been controversial, happens when patients don't realize all the doctors who treat them during a hospital visit aren't covered by their insurance. Right. There you go, right? Yeah. So one proposal would restrict out-of-network medical providers from billing patients the full amount. Instead, medical bills would be based on the median rates paid. Yeah, they just they squeeze wherever they can, man.
And when all these small medical clinics were popping up, I was trying to figure out, folks, okay, what's going on? And then when I dug into it, it was the aspect of Medicaid and Medicare billing.
Sure,
and,
that's a big part of it.
They consider that an emergency room, and the differential in price is absolutely phenomenal.
Yeah.
What's it take to run a little strip mall? Because I don't know where they are in Boston, but around here they're in strip malls everywhere. We get more emergency rooms right now. Emergency care. But bottom line, they run it out as emergency room billing. So pretty wild. Natural gas.
Checking back in, right? Spiked to 211 quickly on that number. Now back up to 213.61. So jumping around a bit, but you were making that trade, as we stated, man. You were at 212.5. You were paying almost a 2-penny spread bid offer, and you haven't got that type of movement to rationalize that type of bid offer spread at all. So you always want to be aware of what you're doing on those for sure.
Let's go take a look at that gold contract. So you talk about volatility, man. He got it in spades here.
What happened at 3 or 4 in the morning, man?
Look at
you see that sell off? Maybe it was between midnight and 2 in the morning. Yeah.
So let's see what time.
It was a little bit before that even, right? The star. Can we just zoom in to get There you go, Yeah, about 1:20 a.m. You're trading at 15.55.
Yeah.
And you trade down like $15 in the span of half hour.
And what we got here, so let's take a look at it.
Look at those last 5 days, man.
Seriously.
Is that a bad tick? No, it's not. I know. It looks like it, though.
So what we have, let's see. You're going into 437,000 contracts. You get 265. More than likely, so still, this could even go to 1530. The beginning of this number.
Sure.
The good news, I like this. This to me is a complex ABC structure up. Check out the B point, pulling back, as light of volume today. Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now at 176, Nasdaq up 85, S&P's up 13, and so let's take a look at this one. Mall-based retailers take beating after U.S. shoppers turn away. Well, they've been turning away for a long period of time.
They have. So you got Kohl's, JCPenney, L Brands all reported drops in same-store sales, which is a critical measure of retail success. Macy's also reported a drop in comp sales on Wednesday, while Bed Bath & Beyond withdrew its financial projections amid weak results. Holidays are the most important time of the year for most retailers, especially probably those mall-based retailers. Deeply ingrained trends such as digital savvy shoppers migrating to wherever the discounts are, forcing prices down across the market, preventing many retailers from regaining their former stature. Decline at Kohl's and L Brands in particular was surprising. One analyst was stating sales should have been up, but they weren't, and that's a bit concerning. They could have posted better results, and the fact that they didn't shows the need for them to drive traffic and maybe even shrink their stores into smaller formats. It's time to do more.
Per square foot. I mean, that's what they're all based on, and I'm sure, not
Kohl's down almost 10%.
Tell them their business, but they know that. It's what do you sell per square foot? What is your rent?
You know,
what is the overhead, and what can you move on product? Right?
I was in the Kohl's on Black Friday, man. They were super busy. The problem being they're super big, like you're saying.
Yeah.
And very inexpensive items. And so how you turn in a profit on such cheap merchandise when you're competing with companies that don't have to pay that type of overhead.
Right.
When you're dealing with, you're not a premium brand. You can't pay the premium. You can't profit on the margins. They're selling discount items at discount prices. Great items, man. The store was packed.
I'm with you.
But you're in quite a tough competitive world to be competing with that type of real estate.
And you can see this has been consolidating down at these lows for a while. So
how about L Brand?
Yeah, is it LB?
Yes. That's what. So
see, this did.
If you can go,
the story's there, but they didn't get hit.
If you can go IGPO, and we'll even pull it up on the Thinkorswim platform because they were lower overnight. And look at that pop on the open, man. And they pulled back. They did. But check out where they went overnight because I believe that, 17.10 on probably some of those other earnings numbers coming out. But
now, you know what? This is what's pretty cool, too, though. They've had a tough time. There's no doubt. If we look at this, you're going to see this chart's a mess.
My goodness, yeah.
Now, what also does happen, though,
back it up even further, right?
Is that the L Brand stores are not that big.
Agreed.
So they're, they would have an easier chance to try to get a grip on it because those stores aren't that big.
And they have brands that are irreplaceable.
Yeah.
Tell me a Kohl's brand that's irreplaceable.
Right.
Tell me a JCPenney brand that's irreplaceable. That's where you really need to. I mean, Macy's is struggling right now, right? Versus you got to have some reason, because if you're just competing on selling other people's goods at a discount, well, good luck competing against Amazon because that's what they can do in the same deal. You know, that's what Marshalls can do. That's what Nordstrom Rack can do. Versus your Victoria's Secret, Bath and Body Works, a little bit of a different deal.
Right.
But boy, oh boy, you're only talking about a market cap of $5 billion right now, and you're taking in $13 billion a year, and you're profitable.
Yes.
And a lot of that is at Victoria's Secret, which is interesting, you know, and they have a decrease. But I imagine I could see something like that turning into a profitable online venture versus I don't know how Kohl's, you know, they can.
You're not going to go to Kohl's.
They just have to compete in an arena with much lower, you know, then it becomes about the process of delivery.
Right.
You know, that streamlining delivery, margins, all that stuff, which is a much different game.
It is, man.
Yeah.
So Macy's, let's just see what Macy's doing out here. So that's 1750.
Because, you know, when I look at things, I mean, I've been talking to you, it's a dicey situation getting into retailers, man. And the one way to protect yourself is if you're going to be in for the long haul, make sure you get a brand that's going to be around for the long haul.
Yeah.
Because at least you can't go away. Because Kohl's, there's no reason Kohl's has to exist in 10 years.
Right.
I would imagine that the brand Victoria's Secret in some fashion is going to exist in 10 years. Macy's, I don't know. They don't really have to.
Oh, I know.
Sears, you know, Sears was a Macy's, right? There's, you know.
Took a long time, but
it did.
Guess what?
It did. But boy, we just went from 70 to 17 in Macy's, so watch out.
You know, bottom line is that, you know, Sears was the biggest brand. I mean, you know, we're going back a long period of time, but the bottom line is that that was a brand that, you know, I mean, they sold houses you could put together in Sears catalogs. How about that?
I remember that Sears catalog as a kid. They had all the toys, right?
Right, exactly.
I used to love it. Go in there, circle your Christmas presents, make that Santa's list, man. Boy, that's a far cry from where we are right now.
There's no doubt.
Yeah.
Let's go back over to that oil market again for a second and see where we're at. So, oil, you're down 86 cents here.
Saudi Aramco got their IPO off. We can trade lower now.
I haven't seen a spike like that. $65.65.
We're down almost $7 from that price, man. $7. And that was Tuesday night. We're not even 48 hours.
Right. And what's happened here? I'll put this on a continuous contract. If you take a look at it, we've been at this area for a long period of time. I mean, you know, it is.
It's a wide area.
It is higher. It is higher highs. We've got. Well, I guess we. Yeah. I mean,
it's quite a range.
66, 60. Look at that. Interesting, man. It didn't take out the high of April.
And even if you just look, I mean, I look at that and I see, you know, $65 to 50.
I know.
Nice even numbers on the 5, and you go back, and that takes you back almost to the beginning of the year. The beginning of last year, of course. Yeah.
People in the oil business must be going out of their mind, because if the drillers and the oil companies, you know, there's going to be a lot of them going out of business. If they can't make money, you know, at $55, $60 oil, you know, well, I guess we had brought this up before. They're making money. What happened, folks? This is the shale producers. They went into debt so highly, they got to pay the debt back. And the real question is going to be, as they roll this debt over, it's going to start being due this year.
Yeah.
So it's going to be like, how does the rollover happen? You know, that's what it comes down to.
I just want to look at the 10-year yield, because talk about some volatility as well, man. Back things up 0.32% from Tuesday night. We dropped from 1.82, call it, to what was the low there? 1.7. And have we hit 1.9? Barely. So 1.7 to 1.9, the heartbeat, man.
Yeah. And if we go into, let's see what Fed Fund Futures is telling us out here. Oh,
that's a decent. Yeah. Have we seen double digits on the high column yet?
We haven't. That's the first day. So
I guess anytime you get 0.2 of a rise in rates in 36 hours, the market wakes up and says maybe we have a hike coming.
Yeah. So the next Fed meeting, folks, is the 29th of January.
Yes.
There's 11% chance of a 0.25% hike.
Yeah.
0% chance of a cut.
Yeah.
But then, you know, then you get March, 10%. And then after that, it's going downhill. Well, it's going downhill the whole time. And then the cut rate goes up dramatically. It's just pretty wild, man.
Yeah, I mean, so I guess they're looking for some problems in late 2020, early 21, versus right now things are rocking and rolling, man.
All right.
Things are heating up.
Heating up, baby. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 182, NASDAQ up 83, S&P's up 14. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 178, NASDAQ up 82, S&P's up 13.5. Let's go inside that Dow Industrials just to see
what's moving it, man.
Yeah,
we're gonna hit 29,000. We got 2 minutes left in the show. We'll see what happens.
I mean, there's no reason we
might
can't.
hit it today.
Yeah,
that's for sure.
You're only 70 points away from it, right?
Yeah. Look at Apple, man. Just remarkable that Apple does not stop.
Yeah. So Apple's putting 40 points into the S&P.
Yeah.
I mean, into the Dow, positive. Goldman 25, Big Mac 20, Home Depot 18, Boeing 13, Chevron's taking away 6, Caterpillar 5. Small numbers, man.
No.
Small numbers on the other side.
I'm looking forward to Fast Market after this, talking about McDonald's, talking about some of those retailers. McDonald's up 1.5% today, man. Nothing to shake your head at. And look at that run on Apple, man. Just remarkable.
This is, yeah.
Can we go to the description for them after?
This is 1999, man.
Pop those bottles.
Yeah, it's.
That's what I wanted to see. 1.355 trillion, man. 2 trillion ain't far away, man.
That's
not. They're firing on all cylinders right now. They get the 5G phone coming out late this year, I believe. Some of that could already be priced into this run, though. So be aware. Buyer beware. And what about Tesla? Speaking of stocks on fire.
Yeah.
Elon Musk. Talk about popping bottles.
He's dancing. 498 we hit. What did I say? The ABC is 5 something.
What are they doing bringing Tesla down $6 today?
Look at
Shame on that market.
So in
That's December 31st that day. It's just so.
6 days, you're up $82.
Yeah.
Really?
Watch out, baby. Watch out for those shorts. I don't know. They better get their act together.
There's still 19.8%.
You don't want to be short a stock
God.
where it's just craziness taking over.
Seriously. Stay right there, folks. We're going to think of swim coming up next. Then I'm at Mr. Basil Chapman, Steve Rhodes, Dave White. We'll be back this afternoon. Thanks, Carl.
Thanks, man.
Go get him, folks.